Welcome. You made it. You made it to a place where together we can shape the future. We are all aware of how the financial world has changed. Security, regulation, things that affect us all every day. They have changed the way we do business forever. And what something looks like from over here may not be what it looks like from over here. So we know that business remains a challenge. The key to meeting that challenge? Confidence, collaboration, momentum, creating new opportunity, driving growth, adapting to the ever-changing business landscape, thinking in a way that reflects a shared need to be the architects of our future, engaging with clients to explore new product lines and new markets. So now more than ever before, we need to stay ahead of the curve, open to new ideas, forging new opportunities, getting on with business, shaping the conversation. Welcome to Boston. Welcome to Sibos.
Good afternoon, ladies and gentlemen. Very welcome to Boston. Welcome to Sibos. We are delighted to be here, and we are delighted to have all of you here with us. We have a great program ahead of us this week, and I think I can assure you it will be a memorable Sibos also in 2014. Please excuse my voice. I keep on working on it, but now I have the great pleasure to open Sibos with a keynote speaker. It's Jamie Forese. He is the co-president of Citigroup, and he is the chief executive officer of the institutional business of Citi. Based in New York, a member of the operating committee. Very delighted to have you here. Jamie, please come on stage. Thank you, Jamie.
Thanks very much. Good afternoon, and thank you for having me. First of all, I would like to thank Swift for inviting me to this truly remarkable gathering, and I thank all of you for coming. This is just my second Sibos. Last year, I joined you all in Dubai for the first time. And being with this group once again, I remain impressed by the energy here in these halls and by what so many of you have achieved in transaction banking, more specifically in payments and securities processing. Swift has been a valued partner to Citi as we've built our own presence in these business lines. In particular, Swift's efforts to help the industry standardize certain practices have laid a strong foundation for facilitating global business in ways that have been nothing short of revolutionary. When it comes to revolutionizing our own operations, Citi has tried to stay ahead of the curve, to see market trends as they, or better yet, before they emerge, to invest our human and financial capital where clients need us and where it will generate the greatest return for our shareholders. More importantly, we like to learn from other forward-thinking organizations, which is why this gathering here among our peers is so important to us. Before I begin, let me stipulate something. Unlike most of those you will hear from over the course of this conference, I am by no means an expert in transaction services. I came up as a securities trader. I've spent my entire career at the same firm, first named Solomon Brothers, which later became part of the core of Citi's institutional businesses in 1998. And to my surprise, I learned the hard way that if you stay in one place long enough, you just might end up a member of senior management. So with that qualification in mind, let me tell you a little about how we at Citi see the world, and then a little about what we're doing to harness current trends for our clients. We've built our strategy to take advantage of what we see as the three defining secular trends of our time. One, globalization, the increasing connectivity of all the world's nations, economies, and markets, a trend which may now be showing signs of stagnating or even reversing. Two, urbanization, the growing concentration of people and GDP in the world's cities. And three, digitization, the transformative power of technological innovations, large and small, and the countless efficiencies they create. It's easy to see how these trends are interrelated and self-reinforcing. Digitization enables the shrinking of the world that fuels globalization, which in turn creates wealth that drives the rise of cities where an expanding consumer class buys digital products and invests again in technological innovation. What I want to do today is specifically drill down on one of these, digitization, and examine how it intersects with two other issues of great importance for the payments and securities processing industry, controls and standards. Individually and together, these trends pose great challenge, but hold great hope for our individual firms, our industry as a whole, our clients, and the world economy. Let me go into a bit more detail. Digitization is increasingly an imperative for the financial sector. Firms must digitize the way they interact with clients, as well as their own operations, or be left behind, or worse. Most of us like to think we live in a digital age, the most technologically advanced the world has ever known. And that's mostly true. But consider this. Even today, 85% of global consumer transactions are still paper-based. For all we've achieved in digitizing the financial sector, we've reached only 15% of the global consumer economy. That leaves a lot of room for improvement and for growth. The projected benefits are tremendous. A study conducted by Citi and Imperial College in London found that a mere 10% increase in the adoption of digital money would move $1 trillion in off-the-books transactions into the formal economy, with a corresponding $100 billion rise in global tax revenues. In an era when governments are struggling to meet their obligations, that's significant. The benefits to companies can also be great, but only for those that keep up. McKinsey forecasts that the adoption of digital and mobile technologies will cause $350 billion in market share to shift among companies in the US alone over the next 3 years. In other words, some companies will win and others will lose. The winners will be those that embrace digital, extend their reach globally, and start to exploit direct-to-consumer opportunities. We in our industry fret a lot about the shadow banking system, our competitors that, because they aren't formally classified as banks, face far less regulation than we do. Our concerns about the unlevel playing field are real and justified. In fact, we should be more concerned than perhaps we are. Some of these companies are experts in the financial technology space, and it's not hard to imagine them beating us to the punch with innovative payment solutions. The threat didn't end with PayPal, nor with Apple Pay, and we'll all need to stay on our toes. But while our industry may have common interests in this area, we are also in competition. So one firm's innovative new product is likely to take share from another's. And there's no easy solution to this dilemma. All we can do is recognize the dangers and work together where and when it makes sense. Which brings me to compliance and control. Here is an area where we can and must collaborate, with no danger to our individual businesses and much upside for our industry. Compliance and control measures are not optional. They are our industry's license to do business. Without strong controls embedded in every aspect of its business, a firm can't survive, nor will it deserve to. The scope of the problem is immense. The UN estimates that the amount of money laundered annually ranges between 2 and 5% of global GDP, or as high as $2 trillion every year. Regulations have gotten much stricter, oversight much tighter, and the fines much heavier. Yet the crooks are clever. Companies must spend massively to keep up with regulation and stay ahead of the bad guys, a level that may reach $10 billion per year for our industry in the near future. Citi is by no means unaffected. We estimate that Citi's staff involved in control functions, both direct and indirect, is nearly 30,000 employees. There's no point in lamenting this necessity because it is a necessity. So rather than complain, let me tell you what we are trying to do. First, we've made significant investments in all of our AML and KYC programs, re-engineering some from the ground up. We have standardized and globalized our principles and processes. We have enhanced our training, tailored it to specific roles and regions, and even specific countries, and made it mandatory for everybody throughout the firm. But more fundamentally, we embed these principles in every business line, every function, and every process, into everything we do. We stress to our people that the business is the first line of defense. Don't come to work thinking compliance officers will cover your flank. It's your job, it's all our jobs, to be vigilant, to notice, to escalate, and to take action. As an industry, we must make it clear to all our employees that inaction will be treated as little different from wrong action. Someone who sees something wrong and doesn't act must also be held accountable. I also want to stress that we at Citi do not see Know Your Customer efforts simply as a necessary burden. A strong KYC program enables us to better evaluate the associated risks with any relationship. We come to better understand our clients' financial position, their investment aims, and their risk tolerance. That allows us to serve our clients more effectively while building value for our shareholders. As I noted, cooperation in this area benefits us all. Shared best practices help our entire industry no less than each individual firm. From developing the first industry-wide KYC registry to its work on sanctions testing and compliance analytics, SWIFT's role as catalyst, connector, and implementer has been invaluable. We at Citi are proud to have been a key partner in many of these efforts from their beginnings, and we look forward to continuing to work with SWIFT in the years ahead. SWIFT's work in formalizing the AML KYC space could and should be a model for global standards, particularly as it relates to how institutions around the world gather and share data as part of our responsibilities to meet regulatory requirements. We at Citi like to point to our network spanning 101 countries and 62 direct custody and clearing markets, by far the most extensive in the financial sector. We are proud of it because it took well over a century to build, and at the current time is all but impossible for any competitor to replicate. It would be expensive and hard to do organically, and difficult to get regulatory approval today to grow it inorganically. While we're proud of this proprietary infrastructure, we don't conclude that we can simply use it to manage our own efforts at standardization. We know that all of us in our industry, in partnership with our regulators, need to collaborate in building a better infrastructure for financial services. Take the concept of legal entity identifier. The LEI initiative is making good progress, with organizations such as SWIFT now issuing these identifiers on a global basis. Through the LEI initiative, we could eventually see every single legal entity across the world registered with a standard set of data. One global repository that could help financial institutions meet AML and KYC requirements, facilitate sanctions checks, and cut down on resolution times during a crisis. To get the most out of this initiative, we still have much work to do. We need to agree on a set of requirements for this data that will make it the golden source for data across multiple strategic uses. And importantly, we need to work with regulators around the world to achieve wider and consistent adoption. The regulatory reforms proposed and implemented since the financial crisis at both international and national levels are putting additional pressure and imposing new costs on all of our business models. Standardization is as yet barely beginning to be discussed, and implementation will take much longer. In the meantime, there is considerable danger that securities markets will go national, breaking the trend of globalization I talked about earlier. And that's the wrong direction. Not to say that the impulse is wrong or incomprehensible. Many countries with stable financial and banking systems felt burned by the financial crisis. Many officials asked, why should my taxpayers be on the hook for mistakes made on the other side of the globe? It's a fair question. The all too common response to try to wall off their economies from the next bubble, the next contagion, the next crisis, while perhaps understandable, is misguided. For our firms, the risk is that progress in creating economies of scale and global consistency will be lost if we are forced to isolate people and systems and create redundancies to meet local requirements. For nations pursuing this type of regulation, the risk is that attempts to wall off financial instability will have the unintended consequence of keeping out investment and opportunity. We have to keep the trend of globalization alive. Here, then, is another, and perhaps the most important issue on which we must work together: encouraging regulators to build a coherent, consistent, and unified regime of global financial regulation. We can't build it ourselves. Our role must be one as advocates. And as advocates, we need to speak with one clear and consistent voice. So as this wave of digitization carries us forward, let's ensure that we as an industry continue to work together. Strong, independent groups can provide leadership, expertise, and the infrastructure for further conversation, of which this meeting is only the most important example. SWIFT's past and present successes show us the way forward. Progress will likely be difficult. Resistance in some quarters will likely be fierce. But where there are common interests, common solutions are always waiting to be found. Thank you very much, and have a great Sibos.
Thank you very much. Well delivered. Thank you very much, Jamie. Thank you for such an interesting and thought-provoking introduction to Sibos. First of all, we are grateful that you have taken the time to be with us, and you will be sure that this leaves plenty of issues to discuss during the week. Sorry. Now, I have the pleasure of handing over to our chairman, Yava Shah. And you will also be hearing why this time you have to put up with me already at the introduction and not only at the very end of this conference. But Yava was with us until 2 days ago, and then he had to leave us for family reasons. But before he did so, he also recorded a couple of messages for us, and I am now saying, Yava, the screen is yours.
Good afternoon, dear friends. I ask for your permission to address you all by video this one time. I am here in the Plenary Hall in Boston, but I have to leave immediately to be with my parents. My father is not well. At times like these, though, a son reflects. Many years ago, my mother and father encouraged me to leave my native country and come to Boston to study at Harvard. And now, decades later, I am praying that I can take this flight and go see my father. And now to business. Let me take this opportunity to look back before I look forward. When Sibos was last convened in Boston 7 years ago, Swift carried some 11 million fin messages a day. It was just entering into the corporate market, and the securities messages accounted for about 30% of Swift's traffic. Today, 7 years later, Swift carries well over 20 million fin messages a day. It covers over 40% of the Fortune Global 500 and has nearly 50% of its traffic coming from the security sector. In the interim, Swift has launched Swift India, a joint venture for the Indian domestic market, opened offices in Sao Paulo, Seoul, Mumbai, Dubai, Johannesburg, and Mexico City. It has created a new operating center in Switzerland, I call it the bunker, and a corporate services center in Kuala Lumpur. And at the same time, Swift has expanded its connectivity options, grown its membership, extended its reference data suite, and entered into financial crime compliance space. It has brought academia and finance together with the launch of the Swift Institute, and startups together with established technology firms through InnoTribe. And Swift has moved far deeper into the space of market infrastructures. It now serves over 100 payment market infrastructures from around the world. And in this space of 7 years, Swift has reduced its average price per message from nearly 10 euro cents to 4.5 cents per message. And there's more. I am proud to announce today that Swift has done it again on the pricing front. In 2010, Swift committed to reduce its prices by 30 to 50% by December 2015. And Swift has already reached that upper limit of 50% that we committed to, well ahead of schedule. A combination of economies of scale, tailored pricing schemes, and cost management have resulted in reduced costs for everyone. So now, this is all good news, and there will be more. That is my pledge to you. Swift will continue to do more of what it does well. Let me outline 3 of those things for you. 1, Swift adds value and will continue to add value. We just don't add value by reducing prices, but by also delivering our core services and commitments: availability, reliability, resilience, and security. And we have delivered. We've expanded our products and services in response to your demands. We have added significantly to the range of connectivity options you have, so you can have flexibility when connecting to Swift. 2, Swift listens to you and responds to you, and will continue to do so. You, our community, are our strength. You tell us where you want to go and what you want us to do, and we go there and we do it. And we deliver. West to east. We have been doing that, and we will do more of that. You said local solutions. Look at Go Local India, SEPA, and much, much more. Compliance. Look how rapidly we've grown into this area. With you, for you. So much as we did with security some time ago, we formed an advisory group, and we're working with the experts to determine our direction and our product rollout. We have engaged with the senior compliance experts from the banks to help determine Swift's priorities in this space. Sanctions screening, sanctions testing, business intelligence for compliance, and KYC, and more to come. And on that note, another announcement. To help you address the growing challenge, Swift will provide access free of charge to its new Know Your Customer registry through 2015 to those banks who fully participate in it. 3, Swift's governance is strong, and this is what makes Swift strong. By governance, I just don't mean the board, which is strong. I mean oversight, and extended oversight, as well as you, the Swift community, each and every user, shareholder, and each national member group. We all play different but vital roles in SWIFT's governance. And this tight and vigilant governance, combined with SWIFT's responsive management and dedicated staff, ensure that SWIFT remains focused, agile, and community-driven, and as a utility that you can all place confidence in. Our trusted partner, your trusted partner. So now, for those of you who know me well, that I always speak in threes and I don't shy from challenges. So I've taken you through 3 strengths and I'm going to talk about 3 challenges. Firstly, how do we continue to protect the core in this ever more challenging cyber environment? How do we ensure resilience, reliability, and security in a world of ever-evolving technologies, ever-increasing volumes, and with growing demands for data? The cyber world is getting more and more dangerous every day. Its threat is increasing. It's organized, it's state-sponsored, and it's out there. Let us assure you, this is a board-level issue for SWIFT, and one that we focus on relentlessly. We invest and we will continue to invest. People, process, technologies, infrastructures, you name it. And we will continue to protect SWIFT, to protect you. Secondly, how do we continue to meet your expectations? Your demands and expectations are growing. It's the downside of meeting them. We are going to be stretched by your multiple and increasing demands, but we are committed to meet your expectations. It is a good problem to have. Third, how do we ensure that we remain a global, trusted third party in this ever-increasing divided geopolitical environment? SWIFT is the most global and the most neutral of companies. And yet we are living in a time of balkanization, fragmentation, and increasing hostility. Is globalization in reverse? Who knows? You read the news, you know the news. It's a very different world that we have today than the world that SWIFT grew up in. The geopolitical challenge is a big challenge. You want SWIFT to be your neutral global provider, and we want to ensure that it remains so. Together we can achieve this, as long as we stay focused on the facts and have the right governance mechanisms. Management and the board are committed to ensuring this. SWIFT is your neutral, trusted third party. In conclusion, you've told us that the global outlook is positive. So here we have it, a strong track record for delivery, a global cooperative that works well with its community and has lots of demands for its services. I am really sorry I cannot be with you this week. It's a historic Sibos, opened by Jamie Faris of Citigroup, and to be closed by Bill Gates. So enjoy, interact, find your colleagues that you've been missing for so long and make new ones. I thank you for your continued confidence, and I sincerely hope you understand why I can't be here with you. Thank you.
Good afternoon, ladies and gentlemen. Thank you, Yawar. As I was preparing for Sibos, as we always do, someone asked me, with all this talk about regulation, compliance, geopolitics, you're obviously feeling good about how SWIFT is doing. Whatever happened to disruption, industry disruption? As in what Apple is doing for the music industry, what Amazon is doing for books, what Uber is doing for taxis. Aren't you worried about it? Has it gone away as a theme? Is it still relevant? And I would submit it still is. As our opening speaker also alluded to, it is very much relevant as a theme. So I thought I'd talk about that theme to start with here and really focus on disruption as a theme. And what better place to do that than here in Boston? Because, of course, it was here in Boston that 250 years ago, when the Bostonians weren't happy with the system, they didn't throw their toys out of the pram, but they throw their tea out of the boat. You see, here we go. They throw their tea out of the boat. And we need not go back 250 years for examples of geopolitical disruption. In fact, I wanted to briefly look at events that happened 100, 30, 20, and 10 years ago as a bit of examples. 100 years ago, that's an easy one. That's 1914. And the world's most advanced economies threw themselves into what was to become the Great War. After the smoke had cleared, 4 big empires were gone. The German, Austro-Hungarian, Russian, and Ottoman empires did not survive World War I. And a 5th empire, the British Empire, was in decline, and the British pound was to cede the role as a global reserve currency to the US dollar. I can't think of a better example of geopolitical disruption. 30 years ago, what happened? 1984. I picked this one, the launch of the Apple Macintosh. This was from the famous Super Bowl ad directed by Ridley Scott. And for me, that stands as a moment in the technological revolution that we're still witnessing today. Digitization and a complete change of many industries. And I think 20 years ago, we had a famous tech executive name banks technological dinosaurs. All of you who can remember that one. Now, we can debate whether it's a smart move to insult your... we can debate whether he was right about the dinosaurs. Their banks are still around today. We can also debate whether it's a great move to insult your major customers, but all is forgiven, and we welcome Bill Gates here as our closing speaker at Sibos. But it is a good reminder that technology has come to banking and is a major force there. 10 years ago, any guesses for which example I picked from 2004? Sibos Atlanta, where our opening speaker decided not so much to insult her customers, but to insult her supplier, Swift, and asking Swift, what have you done for me lately? And talking about correspondent banking, which in her mind wasn't so much as a dinosaur, but it was an experience from the Stone Age that needed major overhaul. And reminded us, Swift, and the correspondent banking community that we too should not take our future for granted. So, 100 years ago, geopolitics, 30 years ago, technology, 20 years ago, the banking industry as a whole, 10 years ago, correspondent banking and Swift. The stuff keeps getting closer to home, all of which is a roundabout way of saying that I think disruption as a theme is very relevant today. And if anything, the pace has picked up. When Heidi Miller made her speech 10 years ago, smartphones were a far way off, Bitcoin didn't exist, only visionaries would see where social media would take us, and look at where we are now. So where does this take us? There's a famous saying, predicting is hard, especially the future. So I was reminded of that. We all want to have a crystal ball. I was reminded of that when a couple of weeks ago, running up to Sibos, somebody interviewed me and asked me, suppose you had access to the Oracle, and not the software from Redwood Shores, but the stuff from ancient Greece, Delphi. These days it looks like this, but in the old days it looked more like this. If I can get the... Yeah, there we go. We had the Pythia who would make her predictions, and just as evidence of her predictive powers, in this thing you can see that the guy back there is holding an iPad. So she must have been really good. But the question was, suppose you could ask one question about the transaction industry in 10 years. Just one question. What would you ask? What question would you want answered? And think about it. You have one question. Think about what you would ask, and maybe also what you would not ask. In my case, I did not ask, is the US dollar still a reserve currency? Because I think that is a given. I also didn't ask, are banks still around? Because I think they will be around in 10 years, and I'll talk about that later. I asked, what's a Bitcoin worth in 10 years? A bit selfish, because it's an investment opportunity. I could go long or short, depending on the prediction. But also because I'm really interested in seeing where it will go. Will it remain a fringe thing, or will it actually replace significant payments? Will it even make inroads into correspondent banking? Or will it just simply not exist anymore because it gets regulated or whatever. I think it's an interesting topic to debate, and we did so this morning at the InnoTribe session. Now, unfortunately, I don't have access to the Oracle, which is just as well because the Pythia had a reputation for making very tricky predictions, for those of you who've read the ancient Greek classics. But I do have access to another Oracle, the Swift Institute. The Swift Institute we founded 2 years ago as a way to bring academia and the world of transaction banking together and do research that's really relevant for that. We've been going at it for 2 years now, looking at topics like banking, the unbanked, the rise of the renminbi, trade flows, etc. And now we are in Boston. Boston is home to 100 universities, among them 2 of the world's most renowned. So what better place to integrate the Swift Institute into the Sibos program than here in Boston. And we've done that. There are sessions from the Swift Institute. And a week ago, we also released a paper from the Swift Institute that analyzes the flows on the Swift network. And that's the Oracle I'm consulting. What do we see on the Swift network? The paper analyzed, what you see here, the flows between countries. We have about 200 countries on the Swift network. That makes 40,000 theoretical combinations, and the paper analyzed it. It's the same type of analysis that has been done for other networks. The author also did it for the Fedwire network, I think, for the CHAPS network in the UK and a few others, but now applied it to Swift. And he analyzed, out of those theoretical 40,000 country pairs, how many are actually active, how many links really are used. And it turns out that about a quarter of those are used, and that means that they exchange payment messages in any given month. Now that 25% is a good figure. That's more than other networks that he analyzed, and that means that we really have a dense network. We really are connecting all the parties to each other, not just to a hub in the middle. And I think that speaks to the strength of the global financial network and the fabric that weaves it together. So 25% is a good number. And then we looked at, well, what's that 25% doing? Is it going up? Is it going down? And you can see the result here. If you look at that percentage, you see it slightly go up until the financial crisis, and since then it's gone down. Not dramatically, but there is a definite trend reversal in 2007, 2008. And an interesting question that the paper asks, and I think that we should debate here or could debate here at Sibos, what causes that? Are we seeing the effect of increased regulation? Are people scaling back on their relationships in the onslaught of closer scrutiny, etc.? Are we seeing that, or is there something else going on? An interesting question for debate here. The other thing the author did is look at the underlying pattern of transactions, which you see here. Yes, we have 10,000 links on the network, but if you look at the ones that are most used, you get a clearer picture, the densest routes, if you will. You get a picture with 3 hubs. You get the United States, which you see on the left side here, that really is connected to all of the major economies. In my mind, that reflects the role of the US dollar as a reserve currency and as a clearing currency. But you also see Germany on the other side as sort of the central part of Europe, the hub in Europe, the link to its trading partners in the Middle East, in Eastern Europe, etc. And then in the middle, there's London as a financial center. The British Empire may be no more, but London still is the financial center of the world. And I find this picture interesting because it reflects both the stability and the change in the fabric of the financial network. On the one hand, it's stability, the US dollar as a currency, Europe and its partners, London. And at the same time, we now see China in there, one of the biggest SWIFT counterparties of the United States, India, Turkey, a lot of the new economies are on there as well. So it makes me feel good to see that the banking community has been able to adapt to changes in the world order and in shifting centers of economic gravity. So a combination of stability and adaptation. And I like to think that the same goes for the banking industry. Even as Bill was calling them dinosaurs, the banks were adapting at great speed. They have fundamentally redesigned the way they operate. They have retooled their their branches, their distribution channels, added mobile and internet, slashed costs, outsourced their activities, built new infrastructures, many new market infrastructures, CLS, T2S, the ACHs, you name it. They were a major part in making sure that banks could stay competitive in offering services, and SWIFT played a role in connecting those market infrastructures. So banks have adapted, and we have adapted as well as SWIFT. I mean, as Yawer was explaining, we've improved our offering with compliance products, the cloud services of Lite and Lite 2. We're going local in economies like India. We're hooking up many of these new market infrastructures. And maybe to add that one, unlike the British in 1773, we've actually been reducing our prices in the process. It's not a tax, it's a price, but okay. We've been doing that as well. So we've been adapting. The real question is it enough? Are we and the banks doing enough in the onslaught of digitization and technology that's hitting us right now? We've seen our network and what we can see on our SWIFT network, the SWIFT Institute study. But equally interesting is what we don't see on the network. And what we don't see on the network are many cross-border person-to-person payments, for example. We know it's been growing fast, and not all of that growth goes through the banking system. We see a lot of smart money going into new startups in that area, into new payment services that are truly global, so far with limited pickup, but who knows? Someone may get it right at some point. And if they get it right, it may not just capture person-to-person payments, it may move into correspondent banking, commercial payments, larger payments. So who knows? The question is, are we doing enough? A big question to debate here at Sibos. But I could equally ask another question, are we doing too much? And that's another question that keeps me awake. And why am I asking that? Because banks have to combine their core mission, keeping the system safe, complying with regulations, dealing with the threat of cyber, and all of that. And that requires tightly managed infrastructures, tightly managed IT departments, a culture of failure not an option. And then they have to combine that with behaving like a startup. How does that work? Yeah, it makes you feel a little bit like that. You have to be both. And the same goes for us, for SWIFT. You expect us to fulfill our core mission of network security, availability, protection from cyber and geopolitics, failure not an option. And at the same time, we have to stay relevant, offer new services, answer your needs, and all of that. You're so unreasonable. So voila, there's the challenge, one of the challenges. Are we doing enough? Are we doing too much? How do we combine it? Regulation, compliance. I would say there's enough to talk about in the coming days here at Sibos. We've put together, as always, a program that we hope allows for that discussion. I think we have over 200 sessions here at Sibos, enough to pick from. It covers topics as wide-ranging as corporates, investment managers, regulation, you name it, you find it here. And let's not forget our core transaction services of payments and securities. So, a great program, a wonderful Sibos. I would really invite you to participate. And I look forward to meeting you all and discussing with you all over the coming days. Thank you, and have a wonderful Sibos.